Hello everybody, Diaz here from 4 Side Effects and welcome to another forecast video. Today is October 13th, 2013. Let's get right into the forecast review. We were looking to go long on a pivot step entry with a bridge bound and going with a synergy zone entry on the Japanese yen. So starting off with the bridge pound, this was the original pivot that I had as the market came into the early morning of the European session. We notice here that they made a higher position here, not giving us any opportunity to get into the trade, meaning if we were looking for a pivot step setup. So by this time, this was the highest pivot, surpassing the prior one. So basically, the market then try to draw back towards the synergy zone. And here's once again how powerful these numbers are. Just check out the video below. As we stated, 59.38 and 59.21 by the tick. Take a look at those numbers. So how incredibly precise we can become with those numbers. After that, it was right at the end of the day, unfortunately, and we were closing in, so there was no way for us to get into this trade whatsoever. If you took the original pivot over here, you had an entry point right there at that time, and your stop loss would have been provided as I left behind here at 59.06 average. Market came back, but never triggered that entry, and it's coming back towards the upper side. So what we should do right now? Well, I have a new levels of high probability of targeting at 60, 16, 60, 43, and 60, 77. Now the synergy zone has been held intact. You see that the market just reached on it and bounced from it. So meaning I'm going to leave that as it is because it did what it's supposed to do. It's not until we see a close below 59.21 that we can cancel this trade. So once again, if you're looking to get into a position into this trade, what I'm expecting right now is the prices coming into the opening of the European session have a pullback of some sort in this area. If that happens, then we can readjust our pivot into this format right here. And once prices continue towards the upper side, that's going to be your cue to go long into this position and place your stop loss below the pivot low right here, or better yet, below the 59.21 area. All right, sounds like a plan. And once again, pretty nice, very smoothly. Unfortunately, the market is the one who dictates if we should and can participate into the market, not us dictating when we want to get in, right? So that's the benefit of having all this multi-layer of confirmation, one backing up the other one. So we're looking for a bullish scenario, same synergy zone, so nothing has changed other than the targets that are different right now once again. All right. So moving into the euro dollar, we were standing aside on the euro dollar, but today we can see new higher spectrums based on very nice confirmation of price action taking the prior highs here. So basically, we don't need this guide anymore. All right. And we're going to be going long the market on a pullback between 35.40 and 35.21 or 20. All right, so I'll round it up to 20. All right, so basically a pullback. If you notice, if I extend to the left side though, that has already happened. Okay, moving averages are separated towards the upper side, so I doubt a little bit that the market will come back in here. Nevertheless, is the levels that we're looking for. So the market is kind of a sideways here from here, giving us an opportunity perhaps that I probably wait until maybe close to the 8 o'clock of the opening on the European session or earlier and see if they reach or try to come back again to that area, leaving behind a pivot just like so. Okay, but I'm not gonna be using this guy right here right now, so I'll wait until I see some pivot. On the other hand, if I would choose one, this is the one that I'm gonna be choosing. This is the highest one, and I'll choose this one over here, which is a prior higher, and this is going to be more profound and perfect um, level of choosing the pivot step. If we go to the 4-hour chart, you'll see this is a more clear one. All right, see how this nicely, we can choose it. It was clearly the ones that we should be focusing on right now, right? So that's the benefit of jumping from back and forth and understanding where you're at. But when you train your eyes and when you watch the markets for a long, long time, it's easy for you to grasp those pretty easily. We're going to be targeting 35.97, 36.19, and 36.42. All right. So once again, synergy zone and three targets. If prices dip and close below the 35.20, we close assuming the losses, whatever it is. Remember, we always protect our capital and cut our losses short. Now, next is going to be Australian dollar. Now, the Australian dollar is completely chaotic. 4-hour chart, easy to see, right? So this is like a non-trending market whatsoever, and we don't waste our time with this guys right here, right? So let's just forget about those. Last but not least, we have dollar yen. Now, dollar yen, we had a buy set up on a synergy zone. Now, this was a synergy zone, didn't work out. Um, but nevertheless, if we go all the way to 30-minute, here's the pivots that were provided for us as the market was pulling back towards the zone but never reached it. If you notice here, the market just went up and gives a buy entry at that level. You see how separate this we are from this energy zone? Well, we go with the 15-20 pip rule, which translates into a stop loss around the 98.2 level. All right, it will be around this level, and our risk was about 33 pips. And this trade provided us with a small pullback against at about 13 points, but gave us about 19 and eventually 20. This is a 30-minute chart, so we had a couple of hours of opportunity to close and manage our trade on a profit until the end of the day. Just as the opening today, they just open gap down, and that's basically what's going on right now. So what we should do? Well, the case, it's in point that the market is just not, I don't see it quite comfortable, just for the fact that they, on the two times that we try to buy it on a pullback, the pullback has not worked out as we expected to. So I feel that the market should retrace and have a real breather and position itself a little bit better. Until that happens, we are going to be staying out of the market. Nevertheless, once again, we had an entry. All right, pivot step. The most important thing, guys and girls, it's that we were bullish. All right, so the focus here is trading in favor of the trend. It was going up. The market went up. That's one thing. We used the pivot step, which is a dynamic trend line approach to triggering. So we did that. This formation gave us the opportunity to identify where we should place our stop. That's a third level of benefit that we have. The next thing is that in this case we have the calculations of the synergy zone, of the targeting of this on this level, and take a look once again how incredible powerful we nailed again the target at 98.57, and the market just dropped from there. So in this case, I just want to give you a little bit of a heads up. You notice I would have done something like this, and my triangle measurement would have been, in this case, the width of the triangle, meaning 35 points from the breakage. If we measure that, if you notice here, 35 points would have been around this level. All right, but once again, this is an impressive number of understanding an average move that the market will certainly go. Okay, this is the average of understanding where the market should go. Now today I'm going to give you a little bit more in-depth that you're going to love it, but using the pivot step technique. If you notice, there's different ways for you to measure multiple targets toward the upper side, and we use 100% price action. How are we going to do that? When we use price action, you notice that the market made it high. So this is the overall most impressive complete move that they should do once the breakage happens. But on the swings, you notice here that the market made it low, came back up, and this high, this low left this high that comes from the most important low after the highest high was made. So meaning this highest high was made, data retracement came back up, and it was violated, meaning that this low was in control right now. Having said that, the same thing applied in here. Market came down, pulled back up, did not took the previous high, but this important low was taken. So now we have three important highs that they were violated, right, on a downtrend that we can use to measure as targeting, meaning we use the first one, 35. We can also use the second one, which is 29, and we can also use the third one, which translates into 21. That means that from the breakage, we have three opportunities of movement and find some certain of resistance when those pips or number of pips actually are reached towards the upper side. The first one was 21, and that would have been right in here, very nicely, right where the top was made and pullback came in. And the next one was 29, was a little bit further up, not bad at all. And then the 35 on top of that. So we pretty much nailed that area of by understanding where in, based on the price action, we have three measurements. We calculate that from the breakage towards the upper side, and we just plot those. Let me do that again. So the first one was precisely 36. Second one was 29. Third one was 21. So the breakage came here, and I go and say, sorry, that was not the one. It was 21. That would be 98.54. You're gonna love this. Hold on a second. 98.54. Now remember, this 98.57 was based on the numbers of the market makers that I received. All right. So and I'm gonna show you the idea of how we come by with those numbers. Now the next one was, what was it? 29. That would be 98.62. So 98.62, roughly around that level. Okay, let me just put it, there you go, around that level. And finally, we have the 36 all the way up there, but not far enough. 98.69. All right, 98.69. All right, so I'm gonna cover two things here. Now you have the idea of where most likely the area is about to reach multiple levels of resistance. Just by glancing at it, you can see, remember, the one in here, the middle one, is the one that we receive used based on our market makers. And why we choose those? The reason that we choose those is because if this guy falls within the other ones that are calculated based on price action, you must have guessed it that I'm going to go with what my big time players mentors are going to be doing. So I'll choose that as my targeting because it is obviously confirmed or lower than the other ones that price action has dictated. So I'm going with the most for sure one for us to get. That's the reason why you see us nailing on those targets over and over and over again. I study the targets, I created a target, I use price actions, I use Elliott wave patterns, I use price action activity, I use Fibonacci, and I use price symmetry, all those stuff. I use it every day. Come up with the levels and wait for the numbers of my mentors to, or the peak time. Let's just not say my mentors because it's just one of them. Once the smart money, let's call them from now on the smart money. Once the smart money sends in their intentions levels for positioning against a trend, I take that number and check it out if it actually falls within coincidence of the numbers that I have. When it does, that's the one we're going to be choosing, right? So I hope that makes sense. I opened up a little bit of understanding what those levels are, and just answering the questions of people saying, how do you get those numbers sold by the tick? It's just, it's a different analysis, different studies, and then confirming with what the big players are going to be doing. and we follow what they do. Okay, so this is how we nail those targets. But in the meantime, let me just eliminate the one that we had. Let's just say that you had this. Well, you have the average area. All right, you just have an idea right now. What is the most probable tendency for the market to move? Once you have the entry, let me give you another training here. I'm gonna zoom in. You're gonna love this one. I mean, like, I'm in training mode now, so bear with me. All right, so let's just say that we got in here. We got the stop. Let me stop the scrolling here. We got long here, stop loss anywhere in here, and we got our three targets calculated, right? Now the prices, you got in, we got down, we got the stop down, and the markets start moving. Do you notice here that they left behind in pivot high? Look what I'm going to be doing right now. I'm going to take my crosshair here, and I notice here that the market made a pivot high, right? And I need to look for the higher swing prior to this one. And this is what we call micro trading. I go back and I see this is the highest swing. So this is what I'll do. Okay. And then now let me eliminate this one so you don't get confused. This would be like my updated version of the triangle or pivot step. Remember, we're already into this trade based on the one that we had before. This is just as the market goes along, so I readjusted a little bit. Why would I do that? Check this out. I'm saying, okay, I'll take the width of the triangle, and that is 28 points. We already have that in here. But now, you might have guessed it already, they got this high and this low, this high and this low. And this is what I'll do. This is when I get extremely creative with all this. I got 24, and I also have 19 from this breakage. All right, so let's see. I'm saying I'll go with 19, and long and behold, almost by the tick, 17 pips out of that breakage. This swing provided me with the possibility for the market to reach at that level. See, and what happens is I start then plotting those areas or those numbers as the market goes along, and when I see most of them conglomerate one on top of each other, that's kind of clustering area, then you know, I will have a very inclined idea of understanding that the market will have a very hard time going through those levels. All right, and if I am already in a profit, I will adjust myself accordingly, meaning I will not get greedy. I'll get my 20 to 40 points and I'm done for the day. So I hope you learned something about how to read the market based on price action using the pivot step as the market goes along, and how you can manage the trade accordingly 100%. Once again, 100% following what the market is telling us, not what we want to take from the market. Okay, this is Carlos Diaz from Four Side Effects, and I'll see you on the next video.